All right, guys, about that time of day again here, folks. Welcome back. Here's your nightly newsletter. It's already the 27th of January. We're flying by this first month of the new year, 2014. Happy Monday afternoon to you guys. What a day we had today. Boy, if I had a nickel for every time we saw the bottom fall out of these markets this year so far, I'd have a lot of nickels. It was another down day in the markets. Before we get there, though, hope you guys stayed warm out there. Boy, natural gas futures pushing pretty much all-time highs right now. You've got record-breaking cold temperatures in the Midwest and the East Coast here in the United States. We got sunshine outside. We got a blizzard of sunshine and 75 degrees out here in Los Angeles. So I feel for you guys out there. Stay warm. So record lows once again sweeping through this country, pushing commodity prices higher. It's so easy to see why natural gas is pushing higher. But for the rest of us, what happened today? Let's take a look at what happened today. We'll get ready for tomorrow as we dig into some of these charts. Looking over my notes for today here, I always recommend you guys keep a journal, and let's take a look at what happened today. Volume comes back into the market this morning. Checking our average volume reports here, we were above average in the volume, and I think a lot of that today had to do with traders taking profit ahead of this FOMC report. Scheduled meeting begins tomorrow. FOMC report comes out on Wednesday afternoon at about 2 o'clock. So remember, we've got one more news, right? One more day here. Wednesday, we're going to hear from FOMC. Now, why could everybody be panicking here ahead of FOMC? Well, remember, right now, we're waiting on our first FOMC meeting of 2014. And about 2 months ago, right, when we heard from the last one, they told us that it would be data dependent if we'd start tapering and if we'd start withdrawing that stimulus. Now, this affects everybody, so that's what's to blame here these last few weeks. In my personal opinion, I think what's happening right now, of course, all markets are headed towards their lows. As of recording this, Russell down, gold down, crude down, euro pretty much flat. But bottom line is that we had a huge bull market going into the end of 2013. It would make a lot of sense for equity traders and speculators to take a little bit of profit off the top. So they're going to sell these highs of the equities. It feels like they're tumbling pretty hard right now, but they're not doing too bad, right? We're still above historical averages. Gold right now, which is very, very strange how everything is falling, as if gold, right? Remember, because of course, if gold's falling, we're going to have increased confidence. But at the same time, we've got crude oil also going lower as well. That doesn't make much sense. We were talking about this morning. European equities this morning, we came in, just reading through my notes here today, came in today at 8 o'clock. We woke up to a very strong pounding on European equities. That carried into U.S. trading this morning. We saw news at 10 a.m. this morning, new home sales numbers. Now, just a little bit of a glimpse into new home sales. New home sales, this has been the silver lining of the housing market. And the housing market, wasn't that why we were doing all this stimulus? Wasn't it the focus of the Fed? So this is going to be a very interesting FOMC report on Wednesday afternoon because according to Bernanke and the crew at the Fed, they've been pushing those rates down. They've been printing money. They've been buying bad debt, right? Call it QE, quantitative easing. They've been doing that to get the housing market back on track. Now, we saw some remarkable results coming out of new home sales. Check out the Northeast. The Northeast dropped year over year 27%. The only area of the U.S. that was up year to year for new home sales was the Midwest. Sounds to me like those home builders found some cheap dirt, and that's where they went out to build their new homes in 2013. We still had, on the big scale of things, we still are way up on new home sales, but year over year, we saw a very weak new home sales report. And since the Fed was really trying to play around with the housing market, that was the goal of their stimulus, now I'm very interested to see what's going to happen on Wednesday afternoon at 2 o'clock. We got lots of news later this week. We got durable goods and consumer confidence tomorrow starting at 8:30 a.m. Be ready for that. FOMC day begins tomorrow. Tomorrow morning, that 2-day event will begin. The meeting starts tomorrow. We'll hear on Wednesday the report at 2 o'clock. We will definitely be listening in for Wednesday's report, and we might start seeing these markets get a little bit jittery here going into tomorrow morning as we go into that meeting. A couple things here. Markets still waiting to hear from the Fed right now regarding tapering. That's going to be the buzzword on everyone's minds in the next 48 hours. is the Fed going to taper? I'm going to go out on a limb right now and say there's no possible way they're tapering right now. One of the things we've heard from the Fed quite a bit is that we needed to make sure, they wanted to make sure, one of the things that we heard from the Fed was it'd be data dependent. And these new home sales, jobless claims, we're not seeing the data that I think would warrant tapering. But you know what? They don't call me very often for the decision. So tune in on Wednesday afternoon. Chinese New Year, right? Are you a horse? Got the year of the horse here. That's going to be end of the week, the 31st of January. That is January 31st. That's Friday. We got Happy New Year. We got the Chinese New Year. That's the solar New Year, right? If you don't know what I'm talking about right now, go to Google, check out the solar year, check out the Chinese New Year. A lot of great tradition there. Not many people obviously abide by it, but you're going to have probably about 3/4 of the Chinese population, which is pretty much about the whole world, right, in terms of numbers. Chinese New Year, this holiday is notorious for people picking up and going on large pilgrimages, right? Large traveling periods. So who knows if that's going to affect the rest of us next week, but that'll be next week. We've got contract rollover on gold on Friday the 31st as well. So look for next week for rollover to the 4/14 contract on gold. Crude oil ends down a point and a quarter, 125 basis points. Crude finishes down at 95.70. Gold pushes lower. And again, what? Crude lower, gold lower? Doesn't make any sense, right? Whenever things don't make sense, something big is coming. We should know that by now. Wednesday's FOMC report is going to be big news for gold and crude traders. Gold pushes lower, down almost 1% to 1256. And we've got the Mini-Russell also collapsing here. We made a killing selling the Russell today. It was almost too easy. Crude, which we'll take a look at in a moment here on the charts, crude took its time. It was trading sideways, and then all of a sudden, after that news came out, it was about 15-20 minutes after 10 o'clock before the bottom fell out of crude today. Didn't matter how you grabbed it, whether you sold short on gold, crude, or Russell, or any of the E-minis, it was relatively easy money in our live trade room. Speaking of which, come out and join me tomorrow at my trade room at 8 o'clock in the morning, and don't forget to join our free trial, right? I'll invite you for tomorrow afternoon to come join me. Now, we're not done yet. That's just what happened today. Let's get ready for tomorrow and see what the charts are telling us. Tomorrow begins the FOMC day, so we've got to remember, tomorrow's going to be a big day. Let's jump in. All right, guys, let's get right into it here this evening. It's Monday evening. We talked about what we saw today. Now let's jump right into what's happening for tomorrow. Before I jump into the material here today, guys, I do want to encourage you, if you have not joined our newsletter, please go ahead and give me your name and email address right there. And I'm going to send you a copy of my nightly newsletter every evening before 8 p.m. Eastern Time. Also, if you'd like to get a free pass to come join me in my live trade room as a guest, I have a special opportunity for you guys. Make sure you join our free trial, or you can get your free pass by giving us your information right there on our blog. Head over to SchoolOfTrade.com. Don't forget, you can register for our newsletter on our website as well. You can also, of course, here register for your free trial there right on the website. So check out the information there. Head over to SchoolOfTrade.com. Let's not delay, though. Let's jump right into it here this evening. First things first, heading over here now to the anchor chart on crude. We can see here on crude oil that we are in a wonderful position here to be selling short. The only concern we have is this, as you can see, this bullish area here, 95.75. This 95.75 area is going to be important. What I'm going to look for is for price to get up off of this support, up to that 96.20, and then bring it right on down. Let's back up a little bit, though, first. Let's zoom out a little bit on this chart. Let's get it all the way out, and let's see where we are in the big picture. As you can see here in the big picture now, we're coming off of this high of this price wedge, and we get certain levels of support that are going to be below us. Now, it's very easy to see the trend is down right now. So my goal tonight, or my goal tomorrow, tonight and tomorrow, right? You can start taking these trades right now if you like. But my goal right now is to keep on selling at resistance as we go lower. So here's what's going to happen. I've got some great profit targets below. Now, we use this 95.75 today in our trade room as a profit target for the short. So when it sold off this morning, we were selling short down to that area for a profit target. Now, this would be what I consider to be price at a discount. I want to sell short right? Get a downtrend. We're below all the key moving averages. I want to sell short here on crude, but is crude oil at a discount or is it at a premium? Well, I want to sell anything at a premium. And in the trade room, we always go through these different analogies of going to the market with a pocket full of gold coins. And we shouldn't sell our gold coins if the price of gold is at the lows. We want to sell when the price is at the highs. We want to sell when we're at a premium. So what I'm going to do here is, if this rolls over, guys, if we just roll over and go lower here on crude, I will be selling short. I'll use the wave pattern short. I'm going to use 95.25, 94.55, 94.13, and 94.83 as my medium-term targets. As we go lower, though, you can see I've got targets down here at 92.74 and 92.09. So if this really starts to sell off into tomorrow, we got plenty of targets now waiting for you here. As I said earlier, I'm just going to get short if this thing starts making new lower lows, and I'm going to use these levels here as my profit targets. All right, definitely not looking to buy right now. Let's put it that way. Not looking to buy here right now. But boy, would I love to see if we could get price above that 96.20 or say up to that 96.20 and then sell it on down. That would be the scenario dipped in gold, I guess you would say, or dipped in crude oil. We go up, we test 96.76, and we go lower. All right. So if we can get some profit taking here on this drop, we can get price to go up here. Be on the lookout, though, for a reversal at 96.20, and then we're right back to selling short again here on crude. Okay, there's your anchor chart. You got your levels ready to rock and roll. Just make sure that you don't sell directly into either the 95.75 or 95.25. I'm not so worried about the 95.75 because we've been able to do some pretty good damage on that. What I am concerned about, though, is selling directly into 95.25. So you're free to get short right now, take some profit at 95.25, and then hold on tight down to 94.55. I will continue to sell on the way down. Just don't sell directly into that support area at 95.25, all right? Trade around it. Moving over to the VIP chart, taking a look quickly at the closing bell analysis. Today, now this is what we call our VIP chart. It's a minute-based chart, time-based chart. I'm looking at some very important information here. Now, all this information we now go over one more time together tomorrow morning in my trade room. So be here tomorrow morning, 8 a.m. Eastern Time, and we're going to use all this and combine it with tomorrow's opening print. So the first thing I see today is the two-day relationship. Two-day relationship. What have we been doing over the past 2 days? We've been going lower. So we're bearish for the two-day. What's my range? Very wide. And what's my closing print? At the lows. Now, these three clues tell us that we can expect more falling prices tomorrow. And because this range was so narrow here today, because the range was so wide today, we're going to expect to see a little bit narrower range tomorrow morning. All right. Now, nothing's written in stone, obviously, but whenever we have a wide range, we typically get a narrow range the following day. If we have a narrow range today, we'll typically have a wider trading range tomorrow. And then, of course, since we have the two-day relationships are bearish and bearish, well, we're looking good here to keep on selling the black gold. First of all, if we open up below 95.21, if we get below 95.21 tomorrow morning, we are very bearish and we're selling short. So keep an eye on the opening print tomorrow. Remember, all this analysis at night is worthless without tomorrow's opening print. Okay, every morning at 9 o'clock when crude oil opens its day, right? We're talking about the trading floor of crude. If we open tomorrow morning below 95.21, I am selling. If we open for some crazy reason, if we open back above the highs at 97.18, that tells me that we've had a complete change of heart by the people trading crude oil. For whatever reason, we really don't care. But if we open up above 97.18, we are bullish. And then what's likely to happen as we go into the FOMC report is we're likely to open somewhere inside of this inside of this range from today. And remember, if we open up inside this range, we become a two-sided market personality. What's my plan? My plan is I'm going to buy the lows. I'm going to sell the highs. And you know what Mama said, right? Don't fiddle with that middle. We're going to stay away from that middle if we open up inside the range. Okay, buy lows, sell highs. That worked very well this morning for a little bit here until we just collapsed and ended up going short. Right, so we sold off today on crude, had a great day in the room today. I missed most of that big initial move down at 10 o'clock, but we were able to pick up some nickels and dimes on the way later on in the session. Made most of my money today, though, trading the Mini-Russell. Okay, there's crude. Ready for more? We go from the black gold to the gold. Let's jump now over to gold. Here's my anchor chart here, and gold is in a pretty similar situation as crude, which is very strange because usually we do not see it that way. Normally, gold is opposite to crude because gold is a shelter market. So here we are now. What do we see here? Clearly, market structure is bearish, but just like we saw in crude, we're hitting these support levels here. Right? I got some key levels of support. So what I've done is I've defined for us we're below all the essential moving averages. Okay, that means I got a clear green light to get short. Whatever I do, though, do not sell short directly into these support levels here. We've already broken the 1255.3, so I'm not going to worry about that one. What I'm worried about, though, is the 49.5 and the 50.3. Do not sell short directly into those areas. What I want, exactly the same thing we saw in crude. I would love to sell using any of these two areas here. First of all, we got that great trend line. And that trend line would be ideal here to get this thing going. All right, so I love to sell around this 1260 area. And you guessed it, I'm going to grab targets here at 49 point. Actually, no, I will be taking that 50.3. That's going to be the target for you guys on the short side. Then we got 46 even, and we got 40.7. I got 41.3. So it'll be targets to the downside will be 1250.3, 1246 even, and 1241.3. We got one more down here at 1236.4, right, if you're feeling a little bit like living on the edge tomorrow morning on your shorts. If we happen to get all the way up here, I've got 65.7. That'll be another spot here to get selling. And then one more spot up top here. Now, the only reason why we would be looking at that short up here at 73.5 would be if these buyers decided this is the previous week's high, right? That's last Friday's high, that dotted line there at 73.2. So I could see a scenario where traders try to push this price back above, right? Maybe something comes out in the news overnight. I don't really care what it is, right? As traders, we don't care what the news is. We just want to react to it. And then if this was to slip and fall back down, that would be another option here to sell back below, again, that previous, right, week's high. But I don't think we're going to get there, though, guys. I think we have this spot right here. I'm going to sell that trend line, right? I'm going to sell the 65.7. And then again, if we can get up there, I'm going to sell it one more time here at 73.5. When I'm in a downtrend, I look to sell at resistance. I take my profit now at levels of support listed below. And so tomorrow morning, we're going to come in and we're going to look at the opening bell here on gold. Here's the VIP chart on gold. This is the open, high, low, close area for the gold futures market. And you can see here, we got this gap hasn't been filled down here. Big bullish run up, which is so incredible how gold, as I'm writing this right now, gold down pretty much a full 1% on the day. Doesn't look too bad here on this VIP chart, but you can see, though, we've come off those highs pretty well. Prior week highs up top there, like I said before, look for a fake out breakout at that previous week's high. 2-day relationship, right? 2-day relationship, you can see we are down from one day to the next, but we're pretty much right in the middle of this last 3 days. So the 2-day relationship, we're pretty much right in the middle, right? Pretty much neutral. The range was very narrow, though. This is a big clue. Now, we are going into FOMC, so FOMC day begins tomorrow. But this is a really big red flag, really big clue. Narrow range on gold today. We just talked about it for crude. That'll be a wide range for tomorrow. So you'll see here, we pretty much closed the closing print in the middle. So anything can really go here now, guys. So we got closing print in the middle. You can see they pretty much just took profit right at the high there, and that pulled price off that high. So we're right in the middle, closing print, narrow range, and we're in the middle of a 2-day. All of this tells me, Okay, the narrow range tells me that tomorrow is supposed to be a wide trading day. I don't think we're going to get it, though, because we are only going to be 24 hours ahead of that FOMC report. And if there's one market out there that loves to react to FOMC, you got it. It's that gold, baby. Closing print in the middle, two-day relationship in the middle. I have a funny feeling here until 2 o'clock on Wednesday, we're going to be seeing a lot of these inside type of trading ranges, just like we saw today. Now, if we open up above 67.0, we're bullish. Open up below 48.7, we're bearish. So we get below the 48.7, you know where we're selling off to, right? We're going to sell short down to 1248.7, possibly that 42.8 if we can get it to run. We get above the 67 even. You know where we're going here now. Wave pattern long up to that prior week's high. Remember what I said earlier, we may see those traders poke their head above the prior week high. Look out for that fake out breakout, bringing it right back down in. I would not expect to see very big moves until the end of the afternoon session on Wednesday. That is after we hear from FOMC. So be careful on gold the next 48 hours. Most importantly, though, look to buy the lows, sell the highs, and avoid the middles. So basically, we're fading the moves on gold as people prepare ahead of FOMC day on Wednesday. Last but not least, we can't forget about the mighty Mini-Russell. The Russell looks absolutely gorgeous right now. We've got bearish trend. We're below all the key moving averages. You can see that I found an easy to spot channel, which gives me a great profit target now for these shorts, but only one problem. Look at this thing from the big standpoint here, and you're going to see I got a lot of great targets waiting for me here. Okay, so we got ourselves some great spots to take profit. 1105, 1096, and 1086.1. Wow. This baby has some real big open spaces below us for this price to really move lower. But one thing that I'm worried about is getting into a trade right now. Now, in my trade room, we're always very quick to remind ourselves, I want to sell at a premium and buy at a discount. What is my price at right now? I'm looking to sell, so I want to sell at a premium. Would we say this price is at a premium right now on Russell? No, I would not say it's at a premium. I would say we just made a new lower low, right? We're probably going to go down to this 1117.5, but the reality is, as a day trader, I sell at a premium, I buy at a discount. Just like selling a car, right, if the value goes up, or selling a home in a hot real estate market, okay, selling at a premium, or buying a car when they put the car at a discount. Or buying a dinner, right? Buying a filet mignon at the local butcher shop, right? When the price goes down. So we want to buy at a discount, sell at a premium. So what that means is you can see we're right around this key level of support here. This 1121.4 is a very important level here. Do not sell directly into that 21.4. What I want is I want price to come off this low, so then I can sell at a premium, right? I don't want to sell at a discount. I want to sell at a premium. So wait for that price to go higher before you hit that sell button. If anything, just get the heck off of this 21.4. Now, if we go right through it, you guessed it, I'm going to be selling short. But remember, as we sell, as we're in this bearish trend down on the Mini-Russell and other E-minis, or any market for that matter, as we're selling, we're not going to want to sell directly into support levels. We're going to use those for profit targets, but they do not make great spots to enter. The ideal scenario here would be to get price to either rise up to the top of that channel, then I can sell it tomorrow morning, or get price to come up into these moving averages, and then once it sells off, right, then we know we've got plenty of room, right, to get down to that 21.4. Once we bounce up off these lows, we're going to have that premium to sell at, and we're going to be able to get some wide open spaces. Now, as you can imagine here, as we go lower, got to take some profit off at 17.5. I can't imagine that low of day is going to hold because we got the low of that channel. That's going to be a great one. Right now, it's right about
I don't know, 11, right? Maybe 11.10. But remember, as this goes later in the session, right, the low of that channel is going to get even lower. So the later this happens, the longer I can let this trade run. Tomorrow morning, though, we're going to come in and see what that opening bell analysis looks like. And here is what the VIP chart looks like on the Russell. Okay, with the Russell right now, we've got a 2-day relationship that is bearish. You can see we're more than 2 days, we're 4 days bearish here on the Russell. So 2-day relationship is bearish. A very typical trading range, right? This trading range today, I would not classify as being outrageously narrow or uncharacteristically wide, right? It's about average. Now, this one right there, that was a narrow range. Right, but the one we're seeing today, though, really not going to be that big of a deal. So typical trading range today, bearish 2-day, bearish 3-day, and the closing print, right, at or near the lows. It's a little bit off those lows, but I think we're close enough. The key is this does not look like a short covering rally happened at the end of the day, right? This looks like traders tried to retest that prior week low, couldn't get it done, and now we're headed lower again. That's what it looks like. What's the plan for tomorrow morning? This analysis tonight is only as good as tomorrow's opening bell. If we open up below 17.5, look out below, I'm selling short. If we open up above 44.5, I'm shooting for the long side here. We're going up to the 63.3. We're going down to the 1105.3. We got the previous week high. If we happen to open up bullish tomorrow morning and we're running hard, we know where we're going to. We're going to that 1180. That's the prior week high. So if this thing comes out tomorrow morning, who knows what's going to happen these days? It's so volatile out there right now. And I don't really care about predicting. I'm going to react. If we open up below the 17.5, though, I've got levels here at 053, 95.8, and so on and so forth on down the line. So keep an eye out there, guys. There's a big round number down here at 1100. I already gave you guys some key levels to look for down here on the anchor chart. We get 1105 here, though, before we get to 1100. So 1105, between 1105 and 1110, that's where we really want to expect to see this price to go to. And remember, it may be later in the session when it hits that channel low. So don't be surprised if it turns into 1105. Can be a channel, right? If it was to go back here, this would be where we hit support and the low of the channel. So a very, very important support level there. I'm not going to buy this thing in a down market. I'm going to sell it, selling at a premium and taking profit, right, of course, at a discount. All right, taking profit at support levels below. Guys and gals, that will wrap up our analysis here for today. So everything here on the move lower, gold moving lower, crude moving lower, Russell moving lower. The big concern right now, though, is all eyes right now are on the Fed. Tomorrow we begin our FOMC day. That's a 2-day event. That means we'll be most likely seeing range-bound markets on the very least on gold tomorrow morning. And I would assume we're going to continue to see some selling off of the equities as traders take their profit that they earned relatively easily at the end of 2013, right? If you made a killing buying stocks in 2013, you're going to take some profit as well before the FOMC report comes out on Wednesday afternoon. Alrighty? Don't forget to join our free trial. Don't forget to register for the newsletter. And come back and see me tomorrow, 8 o'clock Eastern Time. We send this newsletter every evening, Monday through Friday. I would love to get your feedback. Go ahead and give me a comment right here on our blog at sidewaysmarkets.com. Signing off for now from the entire team here at the corporate office of School of Trade headquarters, Los Angeles, California. We'll see you guys tomorrow. Adios, amigos. Bye-bye for now.